Look, our flagship fund, WAM Capital, at the moment is around 40% cash, so we are quite cautious on the outlook for the share market as we move forward over the next 12 months. What we're watching quite closely is earnings growth, and we're still seeing over the overall market downgrades to earnings. And the PE now is trading at above 16 times for the overall market, which is 2 standard deviations above its long-term average. I understand the argument with low interest rates and the long bond being 2.5% in Australia, and that all bodes well for valuations and equities over the longer term, but certainly we are quite cautious and selectively picking amongst a number of companies at the moment which we think could present opportunities to us over the next 6 to 12 months. So what we're watching for really is for whether these interest rate cuts that we are seeing in 2015, how they do spur economic growth and therefore company or corporate earnings as we move forward into the new financial year in a couple of months' time. Look, one stock that we do like is Smartgroup, or the Smart Salary business, the salary packaging business. We are a substantial shareholder in that company. They floated just around a year ago now. Really strong business with a long-term CEO who's delivered great results over a long time period. The key concern for the market at the moment is that they've got a contract with the Department of Defence, which is a material part of their earnings, and whether it will be renewed or not. And we think that could present a really strong catalyst for the share price to move higher on a 6 to 12 month view as we go forward throughout the rest of 2015. But on a PE of 8, grown at 15%, really recently upgraded their earnings. Really a high ROE business, similar to Macmillan Shakespeare, and we think that the regulatory environment will be calmer now for the next 2 to 3 years. Really, we had the noise from Kevin Rudd last year. He was touted to change fringe benefits tax, which obviously would have a large negative impact on Smartgroup as well as it did on Macmillan Shakespeare's share price. We think that the window looks quite clear now in terms of not much regulatory intervention for that industry over the next 2 to 3 years. So we think that bodes well for companies like Smartgroup.